As a solopreneur or business owner in your 30s and 40s, it's easy to start to feel like all you did was create a really bad job for yourself. You pay yourself very little. You have no time freedom, no financial freedom. And the reality is you started a business for those freedom. With the right financial operating system in your business, you can create the system that allows you to build wealth outside of your business, increase your net worth, and have that time and financial freedom that you desired when you started your business. I'm Justin Green, certified financial planner who works with millennials who are trying to build wealth outside of their business so they can have the financial freedom that they deserve. Now, I will let you know, I'm on vacation in Florida, and so I had two options. I could just not post, or I could give you an imperfect setup here, and that's what I'm going to do. So I'm going to continue to teach you, but this is not the audio and video experience that you should expect in the future or in past videos on this channel. All right, let's dive into how you could build $1 million net worth as a millennial business owner. The first thing is picking your business bank account. I see so many business owners that just pick the easy solution, the Bank of America, the Chase Bank, the Wells Fargo, whatever is near them, and they open up a business bank account. But the reality is, there's a lot of really good online banks that have technology and features that allow you to manage your money a lot better than just simply having a business bank account. For example, I use a company called Novo, and this allows me to create reserves so I can allocate money automatically when it comes into my account each month. It can just get divvied up percentage wise. Let me show you what that looks like. All right, so as you can see here, you can create reserves, and they actually have suggestions based off of some common scenarios: profit, operating expenses, owner comp, savings, taxes, which is huge. You can have a description, you can enter a amount, and then you can allocate. This is the really important part: allocate a percentage of future income. This allows you to put a percentage of your future income into these accounts, which is extremely helpful in terms of mentally moving that money off of your plate. And it allows you to make sure you're saving for taxes, make sure you're setting aside enough money to actually pay yourself. But rather than opening, 5, 10 different accounts to follow what would be like a profit first system, you could just have one online business bank account using this technology and have it bucketed for you. And now, while I really like Novo, there are other bank accounts such as Riley.com, Mercury, etc. Some of those will allow you to have one bank account or they open multiple, but it follows a similar situation. Personally, I really like Novo because it's one bank account, makes it really simple, really clean for me to use. All right, the second thing you need to do as a business owner is you need to prioritize profit. Too many times I see a business owner, all they think about is revenue, revenue. What can they do to get more revenue in the door? Whether it's spending more on ads, whether it's lowering prices, etc. And at the end of the day, they don't actually think about what's the profit per client, per customer, per product, whatever it is you're doing to make money. And you need to think about this: is how much is it going to cost to get a client? How much is it going to cost to serve a client? And think about those before pricing your services or products. And at the end of the day, stop spending and wasting so much money on tax deductions, because a tax deduction is simply a discount. If you were in a 35% tax bracket and you spent $1,000, it's only saving you $350, which, if it's something you need, great. You just save 35%. If it's something you didn't really need, terrible, because it just costs you $1,000 and then you save $350. You still spent $650 to get that deduction. That $650 could have been used to start building wealth. So this is what I see all the time. Business owners will shoot themselves in the foot to try and pay zero taxes. And the reality is, all you're doing is hurting your profit and your ability to pay yourself and build wealth outside of the business. The third strategy that's going to help you become a millionaire as a business owner: recurring revenue, or at least allocate your paid in fulls over the time period of how you're serving that client. So recurring revenue creates a sustainable and predictable cash flow situation for your business, which allows you to pay yourself, allows you to reduce expenses if needed, if you can anticipate that cash flow is diminishing. Or the flip side is, if you do get paid in fulls, plan it out over the time period that you serve that client. For example, if it's a 6-month agreement and you get paid $6,000, make sure you don't spend that entire $6,000 in month one, because that 6,000 needs to last that 6 months, because you're going to have less time to get new clients because you're delivering. So that's a big mistake that I see. You'll get all these paid up fronts, you go and spend it, and then, oh shoot, there's no money coming in the next couple months. In theory, cash in hand now is better than like anticipated cash. So that would be in favor of paid in fulls. But personally, I like the recurring revenue. I like the predictability, the stability, and it allows you to really build a business that doesn't reset at zero every single day or month, however your system is set up. So personally, I think the best way to build wealth is to have a consistent and reliable system, which is recurring revenue. Which leads me to the fourth strategy: pay yourself the same amount every single month. So too many business owners will just pay themselves as money comes in, comes out. But if you create a salary for yourself, whether you're an S corp or not, pay yourself a quote unquote salary and then have like a quarterly bonus system. So for example, if you you take a look at your personal spending, your wants, your needs, your fixed expenses, plus what you need to save and invest to reach your future investment goals, then you could figure out, let's say, for example, you need to pay yourself $10,000 a month, but let's say you have a profit of $20,000. You don't need to pay yourself as that money comes in. You can just kind of hold on to it and quarterly take a look at your profit and say, okay, paid myself $10,000 per month as a quote unquote salary. That's 30,000, but I've got an extra 20,000 of profit sitting in the bank account. You could treat that as a bonus and pay it out to yourself. And then you could decide how you want to allocate that money. But this way, you're paying yourself the same every month. So you have predictable income coming into your personal life. You know you can meet your fixed living expenses, and you know you're going to reach your savings and investment goals. And it just kind of creates a steady, reliable, consistent payment schedule for yourself that allows you to predict anything coming down the road. All right. So the fifth and ultimate part of this strategy is you have to save and invest outside of the business. Most of my audience is building a personal brand, a coaching business, a consulting business. You're not building a business that you're going to be able to sell for a significant value down the road. If you are, that's great. That should actually be a part of your strategy, but you don't want to bank on it. So what you need to do is you need to not reinvest all of your money back into the business, because if you can't sell that later on as an asset, then you're not really reinvesting into anything. What you need to reinvest into the business is something that frees up more cash flow and creates profit, because then you can create a cash flow business that you then take the money out of and you build wealth outside of the business. Now, what I really like for business owners is to build wealth in the traditional stock markets, because it's easy, it's accessible, and it's low cost. And it doesn't take a whole lot of time to set up an investment strategy. Whereas real estate may provide higher returns in some opportunities, it just takes more time. Some people like to think real estate's a passive opportunity, but the reality is managing rental real estate often becomes another business, and it takes attention away from your main business. And I've seen with past clients where they get into real estate and they're hyped up about it, but then their main business starts to decline a little bit because it just takes a lot of time and attention away from that. So you have to every single month have a saving and investing goal. And the reality is saving is not enough. So you do have to invest beyond your cash needs. And if you want to become a millionaire, well, then you can reverse engineer. You can figure out how much do you need to save and invest each and every month to become a millionaire. But the real question is $1 million enough? Honestly, in today's age, 2025, it's probably not going to be enough. If you're in your 30s or 40s, you're probably going to need more than $1 million when it comes time to retirement. It might be 2 million, it could be 5 million. It really depends on your personal situation, your living costs, your anticipated future costs. And that's why it's really important to have a financial plan that's unique and personalized to you and your situation. So that way you can establish realistic goals for you and your family. Now, if you want to know if you can reach $1 million in net worth by the age of 40, go ahead and watch this video next, somewhere over here.